it is difficult to determine a specific finance job that pays the most, as salaries can vary greatly based on a variety of factors such as company size, location, and years of experience. However, some finance jobs that typically offer high salary include investment banking. Investment banker play a crucial role in advertising and facilitating merger, acquisition, and initial public offering of for client. Due to the high pressure and fast-paced nature of this job, investment banker tend to earn high salaries, often starting at around $1 lakh per year. A hedge fund manager are responsible for investing large amount of capital on behalf of client with the goal of generating high returns. As hedge fund typically require minimum investment of hundred of thousand or even million of dollars. Hedge fund managers are often compensated with significant salary and bonuses, which can reach into the million of dollars per year. Private equity professionals focus on acquiring and managing companies, typically with the goal of improving the company operation and selling in for a profit. Due to a large amount of capital involved and risk involved in these investments, private equity professionals often earn high salary with starting salary in the $1,50,000 to $2 lakh range and the potential for even higher earning in the future. Corporate finance professionals work within the company, typically in its finance or treasury department, to manage company finance and ensure its long-term financial stability. Corporate finance job can be highly lucrative with starting salary in the $80,000 to $150,000 range and potential for much higher salary in the $80,000 to $150,000 range and the potential for such higher earning as individual progress in their career. Financial advisor provide investment advice and help client make informed decision about their finances. While the starting salary for financial advisor can be relatively low, the potential for earning a high salary is significant, as successful financial advisor can earn hundreds of thousands of dollars per year through commissions and bonuses. In conclusion, finance is a lucrative field that offers many opportunities for high salaries. However, the exact salary for a finance professional will depend on variety of factors, including the specific job, the company location, and the years of experience. Investment banking is a financial service sector that provides advice and service to corporation, government, and individual with the goal of raising capital, facilitating merger and acquisition. Investment banks are expert in financial analysis, negotiation, and deal making. They help clients structure, execute complex financial transactions such as initial public offering and bond issuance. The role of investment banker is crucial in advertising client on the best financial strategy and helping them navigate complex financial market. They work closely with client to understand their needs, analyze market trends, and develop financial model to assess the potential and success of various investment opportunities. This requires a deep understanding of financial market, investment product, and the economic and political factors that impact the financial industry. Investment banking is a fast-paced and high-pressure environment, as investment banker must meet high deadline, handle a large amount of data, and make quick decisions. They must also have excellent communication and interpersonal skills. They often interact with high-level executive and work in teams with other investment banker and support staff. Investment banking careers can be highly rewarded both financially and professionally. Investment banker typically can earn high salary with starting salary in the $1 lakh to $1,50,000 range and the potential for even higher earning as they progress in their career. Investment banker also have opportunity to work on high profile transactions and play key role in shaping the future of the global economy. However, investment banking can also be challenging, as the long hours and intense pressure can take a toll on one personal and professional life. In addition, the fast pace of change in financial market and regulation can make it difficult to keep up with the latest development in the industry. Despite these challenges, investment banking continues to be a popular career choice for individuals with a patience for finance, a strongly analytical mind, and excellent communication skills. Those who excel in investment banking can look forward to a successful and lucrative career in this exciting and dynamic industry. A hedge fund manager is a professional who is responsible for investing large amount of capital on behalf of client with the goal of generating high returns. Hedge funds are private investment partnership with that pool capital from high net worth individual, institution, pension fund. The investment strategy of hedge fund manager is designed to generate returns regardless of the direction of the overall market. This often involves taking a contrarian approach such as short selling stocks which involve betting against the market. Hedge fund managers are responsible for making investment decisions and managing the overall investment portfolio of the hedge fund. They use a variety of financial instruments such as stock, bonds, commodities, and derivatives. To achieve their investment goal, a hedge fund manager must have a deep understanding of financial market, economic trend, and investment strategy. In order to make informed investment decisions, the role of hedge fund manager is highly competitive and demanding. As the manager is responsible for generating high return for investors, they require a strong analytic mind and in-depth understanding of financial market and the ability of to identify investment opportunity and execute an investment strategy quickly and efficiently. Hedge fund manager must also be able to handle risk as they often make investments that are considered to be more speculative or volatile. Hedge fund managers are typically compensated with their combination of management fees and performance-based bonuses due to high minimum investment requirement for hedge fund. Manager often earn substantial salary and bonuses which can reach into the million of dollars per year. However, the hedge fund industry is also subject to regulatory oversight and scrutiny. As the use of high risk investment strategy and the large amount of capital involved can make hedge fund as a potential source of financial instability. As a result, hedge fund manager must stay informed of changes in regulation and ensure that their investment practice comply with industry standard and regulation. In conclusion, the role of a hedge fund manager is demanding and require a combination of financial expertise, analytic skills, and the ability to handle risk. Despite the challenge a career, a hedge fund manager can be highly rewarding both financially and professionally. For individuals who have a passion for finance and a drive to succeed in a competitive and dynamic industry, private equity is a type of investment that involves the acquisition of the ownership in privately held company with the goal of increasing their value and selling them for a profit. Private equity firms typically raise capital from institutional investors such as pension fund and endowments and insurance company and use this capital to make investment in privately held company. These investment can take the form of higher growth capital which is used to fund the expansion of existing business or buyout transaction which involves the acquisition of a controlling stake in a company. Private equity firms work closely with the management of the company they invest in to develop and implement strategy to increase the value of the business. This can involve a variety of activities such as improving operation, expanding the product line, entering new market and restructuring the business. Private equity firms typically hold their investment for a period of several years during which they work to increase the value of a company. Once the company has reached a certain level of value, the private equity firm will typically sell its stake in the company either through a sale to another company or through an initial public offering. The role of private equity professional involves a variety of responsibility including identifying and evaluating investment opportunity, negotiating and executing transaction, and the working with the portfolio company to drive value creation. Private equity professional must have a deep understanding of financial market and a strong analytical mind, as well as excellent negotiation and communication skill. Private equity career can be highly rewarding both financially and professionally. Private equity professionals typically earn high salary and are eligible for a performance-based bonus. Private equity firms also offer the opportunity to work in complex and challenging transactions and to play a key role in the success of company they invest in. However, a private equity can also be demanding and challenging industry as private equity professionals often work long hours and must be able to handle high level of pressure and responsibility. In addition, the fast pace of change in financial market and development can make it difficult to stay up to date on the latest development in the industry. In conclusion, private equity is a dynamic and challenging field that offer a unique combination of financial expertise, operational experience, and strategic thinking. For an individual who have a passion for finance and a drive to succeed in a competitive and dynamic industry, equity can be highly rewarding.